We're talking about the credit policy at the Morgan Stanley annual investor conference in conversation with Chetan Ahya. His first reaction post the policy as well. Chetan, surprised or not quite?
Not quite. I mean, we expected that RBI will change the language on inflation outlook because of the way actual inflation data points were pointing out. So, pretty much in line with expectations.
The two or three things that I could make out of the limited time that I had to read. One is that the MPC is not a unanimous decision. One of the members, Mr. Dholakia, has differed from the rest.
Right.
So that is one key thing. And two, I think they've gone out and reduced the inflation expectations dramatically for the first half, predominantly, as also the second half. Is that a surprise, or you would have expected this?
It's a slight surprise because we would have expected them to change the inflation numbers, but they have changed more than what we thought they would probably. And that's probably because the way inflation numbers have panned out already and the way food inflation numbers have been panning out. But if you look at the core inflation number, it's quite stable in the last few months. So it's really food inflation, which is not predictable.
Right.
And then the other point is that the demonetization impact is what has probably surprised them, and in fact to us as well, which is probably what has made them change the inflation forecast.
Amongst other things that I got to know, I mean, one reason why the MPC and the RBI is saying they're not going ahead and doing any rate action right now is that they see potential upside risks from the fiscal deficit pressures that could come in due to the farm loan waivers. Seventh Pay Commission could have its play as well. To your mind, are these serious concerns which could have any kind of an impact on inflation?
Well, you can't say it's serious concerns, but those are the factors that the RBI has to consider.
Could these have an impact before the August policy?
Some of it possibly, yes. Like for example, we don't know when exactly they announced the HRA for the 7th Pay Commission. So when does that get into the numbers? Secondly, we don't know what is going to happen actually to monsoon. It is just IMD's forecast as yet. IMD, as you know, only forecasts the aggregate numbers, and that's what we know right now. But in the end, how does the spatial distribution work out? And then the impact of that on the farm output is not known. The impact of demonetization, how long it will persist, is not known.
Right.
So those are these uncertainties that they are pointing out. Rural wages have picked up, which is also that we have noticed an RBI governor just today mentioned in the press meet too. So there are a lot of uncertainties related to inflation outlook, and so therefore RBI has to be waiting to see that actually inflation stays low for longer, then take the decision of rate cut.
So here's the question, right? Today's newspapers and the general newspapers as well have these columns about how the government is slightly unhappy with the RBI not playing ball, so to say. Would you believe that there is a higher probability that there could be some rate action on August 2? Because by then, monsoons, a large portion of that would be out of the way. We would have the Fed decision, at least one of the meetings having been done as well. Is there a likelihood there, or would you still not be sure of that?
There's a possibility they can do. It's not our base case.
It's not your base case?
It's not our base case. We
Your
don't
base case
expect
is?
any rate cut now.
Oh, okay.
We think that RBI is done in terms of rate cuts. For rate cuts to come through, we'll effectively have to go wrong on our inflation and growth recovery forecast, which is possible, but right now we are pretty confident that growth will recover. We are confident that inflation will actually go up back again. Look, the headline inflation is one aspect of it, but the food inflation cannot be the only reason why RBI cuts interest rates.
Sure.
And right now, it looks like the headline inflation is low because of, and so when you say that RBI changes inflation forecast, yes, if in reality the inflation does stay low at 3%, but if it is just because of food, then I'm not sure that RBI gets that confidence to cut interest rates in August.
Okay.
So to get the core inflation at a level which is very low by August for RBI to get a unanimous consent or maybe majority of the voters to move on the other side and cut, will still be, the chances of that still seems to be low.
Seems to be low. Okay. So despite the dovish comment, you would probably believe that August is not the time, maybe a bit later on. Maybe not in this calendar.
Maybe not in this cycle. We think
Not
that
in
next move is possibly up rather than down.
Wow. Okay.
So we are, as they move to their stance to neutral, we are also in that thought process that we think that RBI will keep rates stable because we do expect growth to recover and we do expect inflation to normalize from this current 3% level.
Okay. I read somewhere that you believe that inflation maybe could start correct me if I'm wrong, but your view is probably that inflation maybe makes a comeback of sorts only in second half 2018, but growth could probably pick up slightly earlier than that. Is that the base case assumption?
No, from current levels, we do expect inflation to first to go to 4.5% range in the last quarter of this calendar year and first quarter of 2018.
Okay.
What you would have probably read is that we don't expect inflation to go up like above 5% or so, and so therefore if it's 4.5, it is still moderate inflation as growth picks up, and so it will be a favorable environment from investors' perspective.
And growth picks up second half of this fiscal.
In fact, GDP growth data print itself will print from the June 2017 quarter itself, because we think that last quarter was some statistical issues, like for example, GDP deflator was very high. That is already looking like on the basis of WPI data will come off, and so that will help improve the growth numbers. But underlying economic activity also seems to be already picking up. If you look at two-wheeler sales, that's picked up in month of April, already officially announced, but month of May, our estimate by speaking to the companies, it's probably going to be double digit. So discretionary consumption is recovering. External demand, if you just look at last 2 months, exports growth numbers, they've been quite strong. So our sense is that underlying economic activity is already picking up from June 2017 quarter.
Okay. Lastly, I've been here for 2 days. Your team, by and large, is extremely bullish India, both from an equity perspective and otherwise. You believe the economic indicators are also on track to support the momentum that the equity markets could show? Yeah,
absolutely. Absolutely. We expect growth to continue to accelerate from June 17 quarter and be in the range of around 8% in the second half of the calendar year.
Great. Chetan Ahya, thank you so much for taking the time out and joining us. Pleasure talking to you.